In this video, we're going to be talking about market structure. And before we proceed, I would like you guys to take a second, pause the video, and read the disclaimer. This video is not financial advice. Take a second, pause the video, read the disclaimer, and let's proceed. Okay, market structure, right? Market structure is the behavior of the market, right? Market structure is king. Market structure is queen, whatever you want to call it. Everything is built on market structure. Everything is built on market structure. Indicators, Fibonacci, strategies, trades, everything is built on market structure, right? You need to understand that, right? And it can help you see trend in any given time frame. Market structure will help you see how the price moves from one point to another, how it behaves, and all of that. Well, remember in the last video we talked about candlesticks. Candlestick can give you information about the highest price, the lowest price, the open price, and the close. Right? Start by the open price. If it's bullish, then it creates a low. The lowest price creates a highest price, which is the high at the given time frame, then the closing price of that time frame. Like I said, market structure is going to help you boot potential trades. It can help you by telling you when the trend is about to reverse, right? And yeah, on market structure, we have two types of market structure, right? Two types of market structure. We have a trending market, either up or down, right? And a avoiding market / consolidation market. A trending market is going to be going up, right? Uptrend or it's either downtrend. These are one of the these are the two types of trending market. And the sideways market, consolidation market, is either ranging consolidation or sideways market. It's something like this. It's market's just gonna be going sideways. It's not gonna be making higher highs or higher lows. Now, on the next slide, I'm going to break down a trending market. What kind of types of trending market that we have? We have two types of trending market. We have uptrend, downtrend, and uptrend. Yeah, definition of an uptrend is the series of higher highs and higher lows, which indicate that the market is up, it's trending up, it's going up. Right? That is uptrend. A downtrend is a series of lower highs and lower lows, which indicates an obvious downtrend. Right? Something like this, create a lower high, create a lower low, create a lower high, lower low, lower high, lower low. You can tell it's going down with your naked eye. It's not difficult to identify. You can tell, okay, this is going down. It's making lower highs and lower lows. Uptrend will be making low from a low, create a high, pull back, create a higher low, higher high, higher low, higher high, higher low. You can tell that it's going up. This is trending market. It's either going up or down. All right. So now I will show you these characteristics like of a trending market. Important moves, like the first move is called impulsive move. Impulsive move, and the second move is called retracement move. Right? Sometimes retracement can be called corrective or correction, or sometimes can be called pullback. Right? So those are the type of move you get. The first move is impulsive move. The second move down is retracement. Up move, impulsive. Second move down, retracement. Up move, impulsive. Second, like that. On the downside, like a downtrend, markets will move down, impulsive move, pullback, retracements, or correction. You can call it another way. Then another impulsive move, pullback, retracement, correction. Then impulsive move, pullback, retracement, correction. You can call it any of that. Then then impulsive move, right? So now, since you understand that, I will show you a visual representation. You can see this was a move down. On a downtrend, it was impulsive move. Why is it a downtrend? We have a high, a low, a lower high, and a lower low. So it's a downtrend, just like the definition, a series of lower highs and lower lows. On the first move down, this is impulsive move. This is retracement, impulsive, retracement, impulsive, right? Impulsive. So you understand that. So this is how you know in the downtrend, every move back up to that create a lower high is called a retracement. Right? And every move that goes down, breaking lows, creating lower lows, are called impulsive move. Right? Like I said, retracement is when price move back in the recent created price range, right? This is a recent created price range. A move back is called a retracement. Then continues going into the original direction, right? An impulsive move is an explosive price move in one direction. You understand? So now on the other side, I will show you this is why impulsive move, right? If you want to break down this little uptrend, higher highs, higher low, higher highs, higher low, higher highs, higher low, this is an impulsive move. This is retracement. This is an impulsive move. This is retracement, impulsive move, retracement, impulsive move. Right? Then we have a retracement that led to a change of character there and the impulsive move. But if we want to categorize this, all of this trend together, impulsive move, retracement, 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 impulsive move, retracement. So you understand, right? Now, on this slide, I'm going to break down uptrend, right? We're going to dive into uptrend. Remember in the last video, we talked about candlesticks. This is a bullish candle, right? This is what it looks like, right? And uptrend is the series of higher highs and higher lows, which indicate that market is going up, like it's trending up. At a point, price will make a low, right? Then make a high, right? Then it's gonna pull back to create a higher low. This low is higher than the previous one. That's why it's called higher low. Do you understand? Now, since you know that this low is higher than this, right? And we have a move up that breaks the recent high that is higher than the previous high here, right? It's called higher high because it's higher than the previous high here. So since you already know we have a low, we have a high, we have a higher low, we have a higher high, we have a higher low, which says it's a series of higher highs and higher low. We already know this is an uptrend, just like the name uptrend. It's going up, right? It's breaking highs, protecting lows, not going below the previous low. This does not go 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 below the previous low. This is uptrend, right? When you have a low that creates a high, that creates a higher low, that creates a higher high, breaking the previous high, right? Only to pull back to create a higher low, impulsive move, create a higher high with face back to create a higher low, impulsive move to create a higher high, pull back to create a higher low, impulsive move to create a higher high. This is an uptrend. In the candlesticks on higher time frame, it's going to look like this, right? So that's what it's going to look like. This is a bullish candle. If you go on lower time frame, you get a uptrend in a bullish candle. That is what an uptrend is. I'll show you an example on chart, like how it looks like, right? Price is going sideways here, drops down, creates a low, move up, creates a high, drops down, like pull back, retrace, create a higher low, impulsive move, create a higher high, pull back, retrace to create a higher low, impulsive move, create a higher high, drops down, right, which is retracement, pulls it, create a higher low, only to create a higher high. This is a classic uptrend. You cannot get a perfect uptrend than this. This is an uptrend. Every high is broken. Every high is broken while the lows are being intact. The lows are being intact. This is an uptrend, right? And now, let me give you the tips and tricks on uptrend, right? In uptrends, lows are going to be protected. Just like I said earlier, it's going to be protected by staying intact while the highs are going to be broken to make a new highs, right? Lows are going to be protected by breaking new highs in uptrend, right? Ask yourself when you look at the chart, is the high being protected or is the low being protected? Is the high getting broken or is the low getting broken? By that, you can have a definition of what the market is doing. Uptrend is a series of higher highs and higher low. In uptrend indicate that buyers has more power. So you want to be a buyer in an uptrend, right? Buying at potential higher low, which is retracement pullback or corrective move. When create a higher high, you want to back a potential higher low on the pullback retracement, then take your profit at a potential higher high. You take your profit at the potential higher highs and positive move or slash expansion, right? Your stop loss should be placed at the protected low that made a new higher high, that made a higher high. So let me go back here. You identify, okay, this is an uptrend. Yeah, let's say you want to buy this this point, right? You buy this potential higher low, right? You buy there, your stop loss is gonna be here at a protected low, while you take your profit at the potential higher high. That is where you want to take your profit at the potential higher high. So now let's go down and explain what downtrend is all about. Right? Downtrend is a series of lower highs and lower lows, which indicate downtrend. It's as simple as that. On the higher time frame, you're gonna get a bearish candle. On higher time frame, you're gonna get a bearish candle like this, where the price creates a high, creates a low, went back up, retraced back up, only to create a lower high that is lower than the previous high, then drops down, create a low that is lower than the previous low, which is why it's called a lower low. A lower low. Why? Then we trace back up to create a lower high. This high is lower than this high. So now you have a move down that creates a lower low that was lower than the previous low, creates a lower low that is lower than the previous low, creates a lower high that is lower than the previous high, creates a lower low that is lower than the previous low. It's a series of lower highs and lower lows, which indicates an obvious downtrend. That is what a downtrend is. Now, let me show you an example on chart on how downtrend looks like. At the time, price was moving up, higher high, higher low, higher high, higher low, higher high, higher low. Then price moved down, create a low, create a lower high that is lower than this, then drops down, impulsive move to the downside, create a low that is lower than this, right? Then that is lower than this, move back up, create a lower high, drops down, create a lower low, it's lower than this low, then create a lower high that is lower than this high. You can tell this high is lower than this. So now price move down, impulsive movement, create a lower low, create a lower high, create a lower low. Let me give you the tips and tricks on downtrend. In downtrend, highs are going to be protected, right? So by staying intact, while the lows are going to be broken by making a new low, a lower low. In downtrend indicates that sellers has more power. They are more in control of the movement because there's more selling pressure. So you want to be a seller in a downtrend. You want to sell at a potential lower high, which is, price moving down, lower low, lower high. Sell at potential lower highs on a retracement pullback or corrective move. Price moving down. You want to sell on a pullback, potential lower highs, so take your profit at a potential lower low. That is what you want to be in a downtrend, where you identify the trend that, this is a downtrend. What you start looking for is to short. You want to be a seller. Wait for price to retrace back into the range of the impulsive move. Then look for a sell and sell a short and sell down to make a lower low. Yeah, you look for a short and take it down to make a lower low. Right? Stop loss are going to be placed at protected highs that made a new low, which is a lower low. Yeah, you want to sell at a potential lower high and take your profit at a potential lower low. You want to sell right here, around here, at a lower high. Your stop loss is going to place here because this lower high made a new low. that is where your stop loss is going to be. Then, take your profit at potential lower low, right? On the next video, we're going to talk about how we're going to identify where the potential lower highs are going to be forming, where it's going to be turning around, and all that. For now, I would just want you to understand the basic and understanding what a downtrend is, right? And now, then the next part is range and consolidation. If you remember on the slide above, we talked about types of market structure, right? We have a trending market either going up or down, which is explained uptrend and downtrend. Ranging and consolidation market is the next. So right now, we're going to be talking about the range and consolidation market, right? A range is when market or price fails to make a new higher high, and fails to make a new lower lows, right? For example, right, price coming up, right, create a high, pull back. It's expected to create a high, but it fails to do that, create a lower high. Now it's coming down, but fails to go lower, right? It fails to go lower than this low, right? Goes back up, right? Fails to go higher than this high. Then, when markets start doing high, low, that fails to break either side of the highs and the low, that is a, ranging market, right? A ranging market, price is going to move up, create a high, then, fail to go high, go higher, and fail to go lower. It's just going to be going sideways. This is a ranging market, a consolidating market. If you remember the last video, we talked about indecisive candle, when the candles is not, trying to go anywhere. It's just, close around the opening price. Indecisive candle always give you this type of, consolidation. So, in this slide, I'm showing you a clear example of a ranging market in the trend, right? In a live chart or candlestick chart, right? This is a structure. We are in downtrend, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, fails to go lower, right? As you can see, it fails to go lower than this, then move back up, fail to go higher than this, move down, then move down, and it's just going sideways, right? Until it now breaks down, then go back up, change, then push back up. At the top of the range, you want to be a seller. At the bottom of the range, you want to be a buyer. Yeah, like I said, a ranging market is when price make a low or high. This time around, low, create a high, fail to go lower, fail to go higher, is just going sideways, right? Then eventually at some point it's going to break, but you don't have to predict when it's going to be. You just have to wait for it to break and it to show you. Now, tips and tricks, right? Market tends to range 70% of the time. This happens after expansion or a big impulsive moves, right? A ranging market moves in horizontal form, where buyers and sellers keeps knocking price back and forth between support and resistance level. Be a buyer at the low of the range. Be a seller at the top of the range. I cannot emphasize that more. Be a buyer at the bottom of the range. Be a seller at the top of the range. When you identify that we are in a range, we create a low, create a high, fail to go lower, fail to go higher. At this time and point, you want to start selling at the top of the range, buy at the bottom of the range, right? And sell at the top of the range, then buy at the bottom of the range. This is how you're going to trade a ranging market, right? Importance: when price consolidates, indicated market makers are allowing orders to build on both sides of the market, expecting new expansion in near time. Right? When we have this type of consolidation, you know that at some point market is going to expand. Now you don't have to predict it. Just wait for the market to expand, and then trade the range until it breaks. Trade the range until it breaks. Right? Don't assume it's going to break until it does break. When you see a consolidation, train yourself to think that the next price move is going to be an explosive move. Right? at some point when it breaks out, it's going to be explosive. Just like this point, it went down a little bit, right? Then create a swing failure pattern, a failed auction. Then when it finally breaks out, it was explosive and impulsive, right? Now, we're going to be talking about trend shifts, right? How do you know when market is going to shift from uptrend to downtrend to consolidation, or from consolidation to downtrend, or consolidation to uptrend, or from uptrend to downtrend, or from downtrend to uptrend, right? This is how we're going to differentiate and know when the market is about to shift trend, right? For example, right? Before I give you an example, I want to explain or tell you the meaning of the BOS and the chalk. A BOS means break of structure. Break of structure. That's what BOS means, right? BOS means break of structure, right? Breaking the previous highs, right? Or breaking the previous lows, right? Now, BOS occurs when a key high or low point is breached within the current trend. It indicates that the trend will continue or accelerate. This is where, break a high and trend continue, just to continue in the original trend. That is a break of structure, right? That's what you call the break of structure. So a coach is a definite change in sentiment in direction that indicates a trend is about to shift, a warning sign. A coach can be a false break, right? So that's why after we have a coach, we have to wait for a BOS to confirm a trend shift. Now, let me explain, right? Market is trending up, right? Moving up, creating higher lows, higher highs. Then at some point, we create a lower low. This is a change of character, which is the meaning of coach, a change of character. The break of this low, right, it's unlikely of its behavior because lows are being protected while highs are being taken, are being breached. Then for the very first time, we have a breach of this low. We have a breach of this low. That is a change of character. That is not his character. The character has changed. So it's a warning sign, but it doesn't mean the trend has shifts. It's just a warning sign. So now, in order for us to know our price shifts, price needs to make a lower high to make a lower low. But this time around, price continues in the original trend, breaking structure, right? Which indicate a bridge within the current trend. So break structure to move up, create a high, pull back, retrace to create a low, went back up, create a high, then we have another breach of the low. Now we have a change of character again. This is a warning sign. When price move back up, right, creates a lower high, fails to go above this high and breaks down, now we have a break of structure. Now we can say the trend has shifted. What is a downtrend? The trend has shifted from uptrend to a downtrend. What is a downtrend? A downtrend is a series of lower highs and lower lows. That is when you know that, okay, this trend has shifted to downtrend. We are no more in uptrend. We are now in downtrend. Right now, price made a low, create a high, lower high, create a lower low, create a lower high, break structure, create a lower high, break structure, create a lower high, break structure. This is a downtrend. You already know this is downtrend. There at some point when you know that price is protecting the highs, breaching the lows, breaking structure, which is breach of the lows within the current trend, indicating the trend, continuation of the trend, right? And now we have, for the very first time, we are breaking a high after we've been protecting it all this while. Then we'll break a high. When the high is now broken, it's a change of character. It's not like what it has been doing. It's a warning sign which it's a definite change in the sentiment and direction that indicate the shifts. Like I said, it's a warning sign. This can be false, but we need a confirmation that this wants to flip to uptrend. Now we have a move up, we twist back down. Now fail to go lower than this. Then we now did what? Price now move up to break structure. Now we back to uptrend. What is uptrend? It's a series of higher highs and lower highs. Do you understand? This is how you know when a trend is about to shift, right? A trend is gonna go from high uptrend, right? First time we breach the low, which is unlikely. This is a change of character. It's a warning sign. Now you have to wait for confirmation. If price move back up, right, fail to go higher than this high, then drops down, we now have a downtrend. This is a break of structure. This is a change of character. Right, here's the change of character. Now we're back in downtrend, series of lower highs and lower lows. Do you understand? Then from downtrend, we are having a downtrend. Price respecting the highs, breaks the last high. The warning sign, change of character. It's changing character from what it has been doing, right, up to this point. Now we change character, pull back, fail to go lower, then move. It pulls back, fail to go lower, then move back up, right? This is what you get, right? Pull back, right? Fail to go lower, then move back up. We now have a break of structure, right? Just like the name, break of structure. It's now breaking the structure, shifting the trend, right? Then, you can use that to identify when the trend is about to shift, right? So now, in this slide, I'm going to explain how we move from uptrend to downtrend, right? So now we have a clear uptrend, higher highs and higher lows, right? Then price made a low, failed to go higher, breached the low. We have a change of character, right? Now price now move up, create a lower high that failed to go higher, create a lower high that failed to go higher than the previous high, then move down. Right, this is a break of structure, and we are back to downtrend. We went from uptrend to downtrend. How do you know it's downtrend? Because we have a break, change of character, and a break of structure, series of lower highs and lower lows. I hope you understand that. So from here, I'm going to explain again how we went from uptrend to a range, right? We can see it's a clear uptrend, right? Higher highs, higher lows, it's a clear uptrend. High, low, higher high, higher low, higher high, higher low, higher high, right? Then at some point, price made a high, creates a higher low, now went up, failed to go higher than this high, right? Failed to go higher than this high, right? Then drops, creates a lower high, then drops down, failed to go lower than this. Do you know, okay, this is a range and a consolidation, right? Price can go from uptrend to a range, right? And it can go from uptrend to a downtrend, right? So you understand that. So on the other side, I'm going to explain downtrend, right? How we shift from downtrend to uptrend. Price made a high and now failed to go lower than the previous low, right? Only for it to break up, only for it to break up, create a higher high, pull back, create a high high. So the first break is a warning sign, right? It's a change of character where price breaks this high right here. That's a change of character, right? And now pulls back, did not go lower than this, then shoot back up with an impulsive move. We're now back to uptrend. We went from downtrend to uptrend, a downtrend, flipping the structure to uptrend, right? So now I'm going to show you downtrend, lower lows, lower highs, lower low, lower highs, lower low, right? And price tried to create a higher high but failed. Went move back down, failed to go lower than this low, move back up, failed to go higher, then move down, right? That was a range, a minor range, then price eventually break structure, then went back up, change character right there, push up, impulsive move, breaking structure, moving back to an uptrend. I hope you understand. So I'm going to show you some example here, how on a real chart, a Nasdaq chart, on 12-hour Nasdaq chart, you can see price was, moving down, create a low, create a lower high, a lower low. Price move up for the very first time, breaching the recent high. It's a change of character, right? That was a change of character. Price now move down, break structure. Why here? This is where you break the structure. Why? There's a point where the price break the structure, a price move up and create a higher low. But when you retrace, now you want to be a buyer because this is an uptrend, and you buy at the potential, lower high, take your profit at potential higher high, and now you can also buy the pullback around the potential lower low to take your profit at potential higher high. Then, price went up, create a higher low, create a higher high. For the very first time, we're breaching the lows. Ever since, we are protecting the lows, right? Protecting the lows. Then, price breached the first low, which is a change of character, a warning sign, a warning sign that shifts might be occurring, and we have to wait for confirmation. The confirmation is when price made the low and creates a pullback, now failed to go higher than this one, only for it to do what? Create a lower low. Now we are in downtrend, right? So as you know that we are in downtrend, what you want to be in a downtrend, you want to be a seller. You want to sell at a potential lower high to take your profit at potential lower low. Sell at potential low high, take your profit at potential lower low. Easy, right? I hope you understand this. And you can see we went from downtrend, try to change character here. But, we change character. It's a warning sign, breaching the eye for the very first time ever since when this movie has been going down. We're breaching the high for the very first time. Now we want to wait for confirmation. What happens? Price continues, breaking lows. Right? Like I said, a change of character, it does not mean a chalk, does not mean it's trend has reversed. It's just a warning sign that trend is likely to reverse until you have a break of structure that also breaks a new high. That is when the trend has reversed. And this time, trend continues and we went sideways for a while, then eventually now, change character again for it to continue up, right? I hope you understand. Follow me on all my socials, Crypto Big Bag on Twitter, Big Bag Tweets. I will see you on the next video. I hope you understand. If you have any questions, you can hit me up, send me a DM, or leave me a comment. I'll be happy to answer you and help you out. Peace and love.